Hey guys, this is Mike. How's it going? The price of oil just fell the most it's ever fallen in one day, and prices hit the lowest that they've ever gone to, dipping into negative territory. My clients have been calling and asking, Mike, is there an investment opportunity happening here? Today, I'm going to answer three key questions. Number one, what just happened with the price of oil? Why did it plummet? Number two, what's going to happen to the price of oil? And number three, is there an investment opportunity happening? Here we go. All right, guys, the price of oil just fell the most it's ever fallen in one day, and the price of oil went into negative territory for the first time ever. A barrel of oil was trading for negative $40 at the Chicago Mercantile Exchange last week. There's two reasons why the price of oil has fallen so much. Number one, demand has been very weak because of coronavirus. The world has slowed down a lot, and businesses and consumers are not consuming as much gasoline. Number two, there's also a global price war going on in the global oil market right now. Russia, Saudi Arabia, and the United States are all flooding the global oil markets with oil, with supply, and it's driving prices lower. The second question, where are oil prices going to go moving forward? Here's what I think. I think prices are going to recover in the long run, okay? 6 months, 12 months, 2-3 years out, I absolutely think the price of oil is going to recover. Here's why. Number one, demand is not going to stay low because of coronavirus, okay? That's a temporary situation. As the world emerges from this pandemic, demand for gasoline is going to increase. Number two, the global price war. I also think we're going to see progress on this global price war. I think that the global oil producers are going to get together and they're going to cut production, and that's going to support higher prices. So in the long run, further out, I think the price of oil is going to rise back to more normalized levels, $40, $50, $60 a barrel. Question number three, is this creating an investment opportunity? The answer is yes, absolutely it is. If you want to invest in the price of oil, there's really two ways to do it. The first way to do it is investing in an oil fund. These oil funds, they trade on stock exchanges just like a stock. It's very easy to buy and sell shares. And what they do is they are designed to match the daily price movement in the price of oil, okay? Here is the most important thing to understand about these oil funds. One of them is called United States Oil Fund. The ticker is USO, okay? Here's the most important thing to understand about them. These instruments are designed to be very short-term holdings, ideally intraday, which means the investor buys it after the open and closes the position before the close of the market, okay? These instruments are designed to be held for a day or at the very most a couple days. For investors who think the price of oil is going to recover over the next couple of years and they want to use one of these oil funds to gain exposure to that price recovery, these funds are not a good option, okay? They have something called slippage, okay, tracking errors. They will not accurately track the price of oil over a multi-year period, and you can see that in the chart. I'm going to show you a chart right now that's going to show you exactly what I'm talking about. This is the oil fund I just mentioned, United States Oil Fund, ticker symbol USO. What you can see is in the last 5 years, this is a 5-year chart, the value of this fund, the share price has fallen 87%. Now, what I can tell you is that the value of oil, the price of oil has not fallen 87%. This has fallen much more because it has tracking errors. It's not going to track the price of oil accurately in the long run, okay? So everybody needs to understand that about these oil funds. So you might be asking yourself then, well, how do I invest in the price of oil? I'm going to give you a second better option for long-term investors, okay? And that is oil companies. These are the major energy companies. For example, a company like Exxon or a company like British Petroleum. These large energy companies, they have exposure to the price of oil, okay? This is a way for investors to gain exposure to that market. So let's go ahead and take a look at the price of Exxon and see how Exxon's been doing with all this volatility. The first chart I want to show you is an Exxon chart going back to 1968. Okay, what we see is that Exxon was in a very long-term bull market starting in the late 60s, share price rallying like crazy decade after decade, all the way up to 2014. Okay, the share price was up almost, the share price is up 44,700% since 1968 in 2014. Okay, those are massive gains for Exxon. Now, what you also notice on the chart is that since 2014, Exxon's share price has really struggled, particularly in the last year, and particularly with the oil situation right now. Exxon's share price has been pummeled. Let's take a look at the 5-year chart, okay? So Exxon had been trading between 75 and 100 for many years, and it recently plummeted to, the mid 30s, and now it's stabilized at 42. Guys, so this is what the chart looks like. Here's the point I'm making, is that Exxon's share price has historically done very well and produced really solid gains, okay? For the last 5 years or so, energy stocks, Exxon has been extremely weak. The share price is really low right now. I think in the long run, with oil going, I think oil will go back up. And I think in the long run, I think Exxon's share price will recover too. So to me, seeing Exxon's share price this low, this looks like an opportunity. And this looks like a pretty good way for an investor to gain some exposure to a recovery in the price of oil. All right, guys, I hope that gives you some more insight into what's happening with the price of oil and some potential investment opportunities. I'll be back in a few days with another update. Everybody have a great day.